Greetings from the Charter School office. I'm Albert Bertram, the finance specialist for the office. So this sheet we have here is the review of the audited financial statements. We do this on an annual basis. We know that this is our first year having you as one of our schools. So in previous years we had regional board trainings where we brought the board members in and we presented everyone their document and then kind of talked about the document on a broad perspective. So this year we're trying to bring these videos to each individual school with a customized video. So though you didn't get to experience the last delivery method, we hope you enjoy this delivery method. So this document essentially summarizes the audit into 4 pages, adds a couple more calculations which I'll go over, and then you can compare it from year to year a lot easier than having to compare all those pages in the audit. So that was the idea behind it, and we use this information to as a tool in our office. So with that, we'll get into the sheet. We'll start with the statement of net position. So these numbers are all derived from the audit. I'll show you that. So as an example, total assets are $11,306,332. So I'll go to the audit really quick. Okay, so here's the statement of net position. And then we'll see all of our assets right here. And then here's our total assets of $11,306,332. I won't go through and verify everything, but if you want, you could come back and double check everything. So we'll go back to the audit sheet. So as we scroll down, we'll see ending net position. This is the June 30th, 2014 ending net position. And then previous net position is the June 30th, 2013 ending net position. So you can see that the school had a drastic decrease in net position, which we'll get into in a moment. That's basically due to this large negative net change. So as we scroll down to the balance sheet section, this is a list of the current assets as of June 30th, 2014. So that's what these are. These are the assets. Over here we have the general fund classifications. So again, I don't know if I stated these are general fund, so I'll show you these on the audit too. So here's the general fund classifications. So go back to the audit for a moment. So the balance sheet is 2 pages after the statement of net position. So 1, 2. There's the balance sheet. Excuse me. Again, we're in the general fund column. So though there's debt service and other funds, we do look at those. But for this part of the sheet, we're looking in this column. So here's our assets. If we scroll down, we'll see our fund balance classifications. There's a non-spendable amount, and then there's a restricted for debt service bond covenant. So we'll go back to our sheet. Okay, so here's where those assets should match up here. Again, these are general fund assets. Over here we have our fund classification, so there's no unassigned amount. If we go down here, we see a restricted non-spendable. Non-spendable are amounts that cannot be spent because they're either not in spendable form or legally or contractually remain intact. Most of the time this is associated with prepaids, which it is here. You see 666, and then over here you see 666 over here. So coming back over to the fund balance classifications, the rest is the restricted amounts constrained to specific purposes by their providers, such as grantors, bondholders, and higher levels of government through constitutional provisions or by enabling legislation. So that's what restricted are. It is classified as. So if you want to know what the rest of these are all in the audit. I won't go through them because they are not part of this sheet. There's nothing there. So before we go down, we'll move back up. This area is the basically this activity in a quick summarized manner. So there's the beginning general fund balance, total revenues, total expenditures, other financing sources, net change, and then ending general fund balance. So this gets broken out into detail on page 2. So I won't go much more into that except note that there's a large negative net change, which is kind of alarming to us. So below that we have the general fund divided by revenues. This takes the ending general fund and divides it by total revenues, puts in a percentage, and then you could compare that from year to year and throughout the the existence of the school if you went back and whatever, and then you can compare that and see if you're trending upwards or downwards. As you build the general fund, this number should increase. This next number is general fund minus restricted amount divided by revenue. So it's essentially the same calculation, except it subtracts this restricted amount down here. So this kind of tells a better picture of what's available. So there's essentially zero because all this general fund balance is tied up and restricted, and then the leftover is non-spendable. So there's nothing that's unassigned, which unassigned is amounts that are available for any purpose. So that's kind of a red flag too right there. So that's why these numbers are important. There's not always restricted in all schools, but this is a case where this calculation is pretty valuable. So general fund divided by expenditures takes the ending general fund divided by total expenditures. I think the state references using this calculation. That's why we have it on here. We prefer revenues because expenditures can be kind of skewed if you have a large capital outlay or something. So it's important to look at both of these and then understand why one differs from the other. So that's that. Before I move on, and then ending general fund divided by beginning general fund takes the ending general fund divided by the beginning. If this is below 100%, there was a decrease or a negative net change. If it is above 100%, there was an increase or a positive net change. So you'll see that this is well below 100%, and that's because there was a large decrease in fund balance. So as we scroll down, these 4 boxes summarize the notes section of the audit. So these are created, but the numbers are derived from the notes section. And on page 4 of this sheet, there is a note section. So the note section is included because that's really important stuff in there. So notes payable, this is associated with short-term borrowing, state aid note usually, unless the school goes to a private lender. So that's what that is classified as. Long-term debt, this would be the school's bond. Now this only includes the principal payments, it doesn't include the interest payments, so that's important to note. Below that, there's no management information because there isn't a management company unlike a lot of the other schools. There's operating lease information here. Again, you can read the details on the notes section, so I won't go into that too specifically. So as we scroll down, I put this note here, but before I explain that, if this is the square footage that I was informed that was your total square footage. If this isn't accurate, let us know. It affects some of these calculations here. So I can just quickly change that and it will automatically change everything. So utilizing that square footage number, we have our revenues per square foot, our expense per square foot. The difference, you'll notice it's 2. It's actually that's a rounding error. If there were decimals, it probably would show decimals. And then payment per square foot. So this explanation explains that payment per square foot is calculated using the long-term debt payment. So this includes the principal and interest payment divided by this total square footage. So $7 per square foot is actually good. I think our average was 13 or 14, so that's actually low in comparison. Operations and maintenance. This takes the line item, which I'll show you, of operations and maintenance on the next page right here, and then divides that by the total square footage. Again, that's another comparison. I believe that this is comparable as well. I believe the average is 15 for this one. So just so you know, square footage divided by fall 2013 count takes the total square footage and divides by the fall 2013 count, which is the corresponding count for this fiscal year. So that's just another comparison. You can compare these from year to year and see why they're changing and ask why they're changing, and they're not meant to be absolutes, but they'll help you ask good questions. So as we scroll down, page 2, general fund comparison. This is the detail of that little box in the upper right hand corner of page 1. This is the actual as of June 30th, 2014. This is the actual as of June 30th, 2013, and then the difference. So you can ask the question why the state aid went down. You can see that pretty clearly. And you can do that with any line item. These are revenues. These are anything below this is expenditures. Now, if you didn't know what one of these are, I can show you a little trick. I'm gonna have to pause the video for a moment. All right, I'm back. I had to get this document open, so I'll show you a trick to, if you don't know what these numbers are here. These are accounting codes, and if you don't know what any of these items are on this sheet, I'll show you a trick. I took the accounting manual and put it into Word, and then once it's in here, you can go find and then come over here to the bar, type in whatever you're looking for. We'll use basic programs as an example. Make sure you're on results, and then it'll actually look for that in this document. You can find things. So you can't put broad things in like instruction or words that are going to be in here too much, because it'll say there's too many. So you have to be kind of focused on your search. But if you once you narrow it down, you're in pretty good shape. So here's the accounting code for basic programs as an example, and basic programs are instructional activities including enrichment designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, social, and or emotional handicaps. And I won't read anymore, but yeah, if you need to know what anything is, we can find it pretty quickly, or you could do this trick yourself and look stuff up at your on demand. So that's a good trick. So as you look through these, compare and try to figure out what's going on. This is just information to try to help the board members. Now you'll notice that these don't have codes on them. These aren't part of the original template. Some things that aren't part of the original template, I didn't go back and include all the codes, but you could easily look those up just the way I just showed you. This should match up to the box in the upper right hand corner. This is June 30, 2014, June 30, 2013 again. So down here we have our budgetary comparison. This is the original budget, the final budget, and then the actual. So this budget difference takes the difference between the actual and final, and then the percent change is the difference between the actual and final percent change. So this talks about the Uniform Budgeting Act. This is a note just to show that the original budget is due July 1, so there's usually a large discrepancy between these two budgets, which there isn't in this case, but a lot of the other schools have a large discrepancy due to the time factor. Your count date isn't until after school starts, and so the amendment usually changes what's going on here. So down here we have our instruction divided by revenues. So, and then that's put in a percentage. So that I'll go up and show you. That takes the total instruction, divides that by total revenues. So there's a little trend here. This number is calculated just from the previous audit. It's not included on the sheet, but these two are on the sheet. So we'll go up for a second. You'll see that it trended up from 38 to 39. So there was actually a decline in instruction expenditures. So someone will initially think that that was how did that percentage go up when there was a decline? Well, that's a ratio. So if this revenues went down by much more than instruction expenditures went down, so that's how that ratio could actually increase even though total expenditures decreased for total instruction expenditures. Another example of how that number could be kind of misleading is if you had a teacher that resigned or retired or whatever that got paid $50,000 and a new teacher was hired for $30,000, that could skew this number too, while not offering any less instruction. We could get into the argument about quality, but we won't. This is just about the numbers, not the quality of instruction. So that's a different discussion. But that's an example of how these numbers could be skewed or affected. So moving over here, we have our revenues divided by fall 2013. Just takes the total revenues and expenditures, divides it by that fall count, and then calculates the difference. This is something to watch from year to year to see if it's trending upward, downward, just to compare. As we move into page 3, this is the enrollment numbers section. So these numbers are derived from CEPI, which there's so many acronyms in education. I'm going to show you what CEPI is. CEPI is the Center for Educational Performance and Information. It's a state-run site, and if you come down here in My School Data, that'll bring you to like a filter page where you have to select what you're looking for, and then you can look for the student count, whatever, free and reduced lunch count, special education count. And then there's all these large spreadsheets with a lot of information. So I have essentially dug that information out for you, and that's what this is. That's where these are derived from. They may be somewhat different from the enrollment on your state aid sheet, depending on what month you're looking at. And obviously, if you know the count more accurately in your school throughout these years, it could be different. But these are what's from CEPI. This one is the number I received via Epicenter, which is our file retrieval system between the charter school office and the school. So in that system, I received a form that's called the DS4061 form, and that's an unaudited number, so that's subject to change depending on if the audited number changes. So just so you know, so this over here, this column is the numeric display of the data, so it shows the trend, the percent change from count to count, essentially. So you can see the numeric example right there, and down here for the visual people, we have a visual portrayal of the data. So you'll see that the numbers have trended slightly downward recently. So as we come down into this section, this is the free and reduced lunch section. These are all from CEPI. And then this takes the free and reduced lunch count and then divides by the total fall count, and that's how you get this percent free and reduced lunch. And then here is the free and reduced lunch count in a graphical display for our visual people again. So as we move into page 4, this is the note section of this sheet, and this is all derived from the audit too. I believe it all is. Usually I don't write a whole lot of my own notes. I usually do follow up separately. So this is all from the audit, and I included page numbers. So if you want to know about this state aid anticipation note, it's on page 415. So long-term debt, bond covenant. So it's important for me to note before we move on here that the Academy failed to meet the bond covenant requirement, which is pretty serious. So if we go up to the top again, this restricted amount would be the bond covenant amount, and that's showing that they haven't met the school hasn't met the requirement for that bond covenant. So that's something to bring up. And then in the findings section, there was 4 findings. Some of them are repeat findings. So if this says 2013 here, like this and this, these are repeat findings. So these were actually a finding last year as well, and they weren't corrected last year. So these are serious. Just to put that into perspective, we now authorize 42 schools, including Detroit Community Schools, and out of all of our 42 schools, we had 8 total findings, and that's including these 4. Of those 8, 3 of them were associated with just a small school that had a finding an automatic finding just for being small and having a lack of segregation of duties. So the auditor protects themselves by putting that finding in there. And then the other one was that the auditor had to assist with preparing the financial statements, which is another auditor covering the auditor's back. So outside of those 4, which are at 3 different schools, this is kind of a serious issue. Now I have good news in relation to that, though. If we go back to the audit for a moment, I got to go to page 53. This says that the Academy concurs with the recommendations of auditors. So this is the corrective action plan. So hopefully that all these these findings are all corrected. And so that's good news, but it was important to bring up that they're all here. And then here's the reference numbers if you wanted to look at these in more detail. I just kind of summarized them. Moving into the bottom, there is information. The Academy switched auditors this year. And then this talks about the reward school status a little bit. I thought that was a good point to note. And then this part, I'm going to have to pause the video in a moment, but the excess expenditures over appropriations is another issue that we had at, I think, 2 other schools out of our 42. This is an issue with budgeting. So here's the budgeted amounts, and here's the amounts that were actually the actual expenditures. So here's the variance between the 2. So this was the amount over budget. So I'm going to show you in the accounting manual. I'm going to have to pause for a moment to get to the right page. But I'll show you in the accounting manual that this is not a good thing. So I'll pause for a moment here. Alright, I got it all set up now. So we'll go to the accounting manual again. So here's the example that references the importance of the budget. It's from it's about the violations of the Uniform Budgeting and Accounting Act. So administrative officer of the school, district, or PSA shall not incur an expenditure against an appropriation account in excess of the amount authorized by the Board of Education. The administrative officer or an employee of the school district shall not apply or divert money of the school district for purposes inconsistent with those specified in the appropriations of the local school board. And then here's the reference. So it's important that the school budgets everything that they intend to expense or utilize or appropriate, I guess I should say. So this is an example. Again, I did the same thing to the other two schools that did this. So it's just something important that should get cleaned up. I haven't received the budget from DCS yet. They, I believe, a request for an extension was granted. So if we go to this sheet, this is the most updated information that I have. This is the quarterly ending June 30th, or excuse me, December 31st. I'm naturally saying June 30th. December 31st, 2014. So this would be the second quarter essentially. So something to consider for the board members, if something is, if this is halfway through the school year, you would hope that these numbers would be around 0.5. So if something's drastically over 0.5, that's something to look at and ask why that is. And if it's drastically over budget, the budget needs to be amended and corrected to show what's going to happen. So I hope that this is being done in the budget that will be submitted soon. So I'll go back to our sheet. I believe, oh, there's one other thing I have about the budget. This is the most up-to-date budget I received. It's the one from June 27th, I believe that is. And then it shows the ending general fund balance of $74,678. Yeah, so this is a proposed 2015 budget. So this amount, so that shows that the general fund way up. I'll go way up here. So that's showing that this is going to go down even further in the coming year. So certainly the restricted debt covenant amount won't be met. So there's kind of a lot of red flags going on. So that's something to bring the board's attention and try to figure out a plan of action from the board's perspective. So I've included this contingent liabilities. It just talks that there was a lawsuit. It was said it wasn't going to have a material adverse effect on the financial condition of the academies. Even so, I put it in there. So that's from the audit again. So we hope you found this video beneficial. That hopefully the corrective actions corrects those findings, and I hope you enjoy this delivery method. And thanks for all you do for the kids of Michigan. Look forward to working through these problems with you. Have a good one. Take care. Bye.